Trading is composed of three things. It doesn't matter if you're a swing trader, a scalper, you're trading credit swaps, you're in junk bonds, you're in commodities, you're doing Forex. It does not matter. You got three things that make up trading, right? You have risk management, you have your edge or strategy, and then you have psychology, right? I could teach you edge. There's pretty much a right and wrong for risk management, right? It's pretty cut and dry, only slight variances based on your risk management style, maybe built off your personality. But psychology can't really be taught. It is a solo journey, first player game. And even though we're going to cover this, the 101 of psychology, what it takes, and what kind of headspace you want to be in to be a successful trader or even a successful gambler, this is where the similarities between trading and like professional poker playing are the strongest, right? Traders are the most emotionally in control people, and that doesn't mean that they don't feel emotions. It just means that they're always self-aware of their emotional state, and they understand that this is likely affecting them in some way. They are able to recognize that in real time, in instant moments, set it aside or work their way through it, and still act in a logical manner. It's not easy to do, to have that level of self-awareness. It's a muscle that has to be repped out, right? And for some people, that's going to be a tougher journey. And then there's other people. I've coached some people that just seem to have good mentalities right off the bat, But even then, there's always going to be periods of time where this is harder for you to achieve than others, right? It's going to have to do with what kind of state your life is in. Maybe something has happened. It's going to have to do with how your trading performance has been. Everyone hits slumps and dry periods, and it's really hard to keep that psychology pristine. But it's important to hammer this, right? Because I can teach you the first two. And even at the first two, even if you have the tightest risk management, and even if you have a world-class edge, a pristine strategy, if your psychology is not good, you will not make money. Okay? If it slips, you can still spiral. And bad psychology is how people blow up accounts fast, because then it starts to degrade the other two, right? Once your psychology gives out, you stop following your risk management rules. Once your psychology gives out, you start revenge trading. You start working outside of your playbook. You're no longer keeping in line with what is your defined edge. You start getting loose and just spraying bullets, spraying plays on the market. That's not good, right? So it all starts with psychology. And so do not think that after watching this video, you're going to walk away and be like, "Yep, I'm done. Mental fortress. Nothing will ever bother me again." This is a long journey, and I highly recommend you take the things from this that stand out to you the most, and you put them on Post-it notes. Maybe you say some affirmations. Maybe you get in the process, or in the routine rather, of visualizing what it would look like, or what thought process you think would be required to act out these concepts that we're going to talk about, right? Some traders, institutional traders, are even taught to visualize themselves winning a trade. Visualize how a trade plays out from their playbook. Visualize how they handle that moment of indecision, right? To start their day before they sit down, right? Just like an athlete would, visualizing winning the game, right? Bringing it to reality. And all it is it's like stretching before your workout, right? It's a warm-up. You're getting yourself ready, mentally prepared, right? Preparedness is a huge key factor. This is a performance sport, a very intense and performance sport. So treat it with respect and take it seriously. So let's cover the key concepts for your psychology, all right? The first, this is going to be so key that you understand that trading is a game of probabilities, all right? What we have to do is become professionals at dealing with uncertainty, right? And that also means that we have to identify what the probabilities are of something and recognize that wins are just the 60% outcome and losses are just the 40% outcome, or whatever the probability is. If you take 100 trades and you have a 60% win rate, you're going to win 60 of them and you're going to lose 40. That's just part of the process. It really shouldn't reflect on you as a person because it's all just probabilities, right? It shouldn't be negatively affecting your mental. That doesn't mean you don't feel the emotions, but that means you don't let the emotions submit in your mind, become a negative drag. Okay? You really want to disconnect from the money and just understand that this is just a process, right? You want to focus, therefore, on making the best decisions and not on the actual outcomes, right? Because it also comes down to the fact that a bad trade can win and a good trade can lose, okay? You have to understand that luck is always going to be a factor here. So if you win, but it was a bad process and you just got lucky, when you start reviewing that data or your trade log, and that's going to corrupt your data, lead to bad outputs, right? Lead to bad habits as well, right? So you want to make sure that you are hyper focused on not just making money, but being a good trader. Okay, I'm going to say that again, all right? You don't want to be just focused on making money. You want to be focused on being a good trader, okay? One is going to put you immediately in a bad mental state. It's going to make it harder, especially for some of you that are in a position where you're trying to change your life, right? You're trying to get away from your 9-to-5, and you need to make money, right? You're trying to maybe get out of whatever financial situation you are, and you're seeing this as the last leg. Understand that you are trading on hardcore mode, right? You are making it as hard as it possibly can be. Trading is easier when you don't really need the money and you have some sort of other income stream. It is the hardest when you put yourself in a position of, I need to make this money to pay my bills, to fix my situation, to pay off my debt, or in a position where you're like, I have to make back all the losses. Like, I got to make them back. You're already coming at this from the wrong angle. And you need to be thinking of your psychology from the idea of, I need to be a good trader. What does a good trader do? Okay. And that means you don't do resulting, which is derived from gambling, which is looking at outcomes and assuming that that equates to a good or bad process. If I made money, it was a good decision. If I lost money, it was a bad decision. It's not true, right? Anyone could get lucky on something and make money. You know, random headline hits, and then boom, their 0 DTE put options print hard in their direction, even though market was clearly bullish, right? They got lucky, but they think, I knew it. You know, they'll say it all the time, the 2020 hindsight. I know it's going to happen. And then they take that false confidence and they try it again and again and again until they blow themselves up. And then after they blow themselves up, then they learn the lesson, right? That's what happens all the time. So you want to detach. We'll play and trade. That loses is not a mistake, rep. Okay, we don't want to take the losses to heart. We don't want them to shake who we are. You have to understand that it's just probabilities, and that losing is part of the game, a part of the process. Each trade is just one of many. This is exactly right. You know, one of the big things that I always teach, that I actually send all members daily reminders, everyone that I'm teaching, is that we don't get rich off one trade, we get rich off 100. And you know what? I should change it to 1,000,000, you know? 1,000,000's extreme. I should change it to 1,000. Really get some reps in there. It's all about getting the reps, all about letting the probabilities play in your favor. If you have an edge and you have identified something that's going to work 80% of the time, you have to understand that the sequence in which those happen is also going to be randomized. So you can, small probability, but you can lose 20 trades in a row before you go on a massive win streak and win 80 times, right? But if you're confident in your process and you keep that confidence and you keep your psychology right, you can weather the storm of those 20 trades, those 20 losses in a row, so that you will be there on the other side for the win streak, right? Sometimes we're just here to survive, not to thrive, right? We want to be there to survive so we can make it to when we thrive is actually the better way to say that. And that also comes with detaching emotion from money, right? Losses happen, edge plays out over time, not one trade. Keep a clear objective mindset. Trading emotionally leads to revenge trading, FOMO. We kind of covered that. Embrace uncertainty and adaptability. There is no free lunches, right? There will be times where you can have high confidence. You know, you got an A-level setup and you can lever up into the trade. But you have to understand that even in those scenarios, you are not trading from a position of, I know all the facts and I am guaranteed the outcome. Unless you are doing something maybe very illegal and you are literally the market maker, or you have some very key insider information, right? And even then, you know, there's plenty of stories of people still what they think is they have the information, and what they think the market's going to do with the information ends up not being correct, and they lose anyways, right? There really is no free lunches, right? You have to understand that there's never going to be a point in your career as a trader that you're going to have absolute certainty, right? You might at points feel confident to the extent that you feel like you have absolute certainty, but you have to always be cognizant of the fact that this could not work, right? And you have to not get starstruck by thinking about how much money you can make, but always be thinking about how much you're going to lose if something doesn't work, right? So you have to accept that you will be wrong often. You have to cut your losses quickly. Flexibility beats stubbornness. Rigid traders blow up. I love this one. This one describes a lot of the early mistakes I made coming up as a trader. I struggle with probably most. I feel like I'm very smart. I feel like I understand things very well, and I let my ego. I used to let my ego get in the way of that a lot, where I want to be right rather than reacting to what the market is telling me, right? I might be right, but am I right in the right time frame? It matters a lot, right? I might be right, but my rightness might not become apparent in the market for another year, 2 years, 3 years, 5 years, 6 years, right? Is that going to help my trade? Or do I need to be flexible with what the market's doing now and get out of my own way and stop trying to be right and instead be a good trader? Be someone that is reacting to what the market is doing, right? Reactive to the price action and what I am seeing on my screen. Okay. Focus on process over profits. That's what we talked about that, right? With taking over 1,000 trades, you want to stick to your rules and even improve your edge. That's a big thing actually we should cover, right? When I talk about you don't want to think about making money, you want to think about being a good trader. What comes with that is always, look, I'm a person who maybe some of you could sympathize, maybe not because you're newer to trading, but I've been doing this a while. I have a lot of confidence, and there is even some ego there, and that I know what I'm doing and I'm good at this. And even when I'm losing, my confidence at this point of my career does not frequently get shaken. I could get frustrated, but it really doesn't ever really get shaken, right? I've blown up accounts and come back plenty of times in my early years. So I have an unwavering confidence that regardless of what happens, I can go get a regular job, make some money, and come right back to the markets, make it all back, even if something catastrophic happens, right? That comes with experience. But what you also still need to have, no matter what point you're in your career, is still a humbleness and the realization that there's always room for improvement and you can always get better. And I think that there is no end goal with trading. There is no, I figured this out and boom, I'm good. Like, I know traders who've been trading for, 20, 30 years who are still finding new tricks or new tools or having to learn new tricks and new tools because markets change, markets evolve. Markets have different personalities. There's different, geopolitical situations that occur that are unique and cause unique outcomes. There's a first for everything. Recently in 2022, we had, one of the first years with poor performance in bonds and stocks, and weakness in commodities. It was kind of like there was nowhere to hide. That's really rare. It's only happened like twice in the history of the market, maybe 3 times. It's not important, but so when situations come like that, and you have to be flexible. You can't be rigid, right? So also understand that trading is a skill, not a lottery, right? It is a skill, not a lottery. People who think that trading is gambling will never become profitable traders because their mindset is not giving it the due respect and seriousness necessary to build that success, right? If you don't believe that it's possible, then it's not going to be possible, right? Bottom line, great traders don't chase wins. They focus on making the best decisions with the information they have. Your mindset is your greatest weapon. Without mental discipline, no strategy will save you. Trade like a pro, think like a poker player, manage risks, stay rational, let probabilities work in your favor. Take this further, keep a trading journal and track why you made each trade, not just the outcome. That's how you level up, right? And just to further elaborate on that, I think it's really helpful when you're keeping a trading journal to also label the losses. Like, this loss was because of this mistake, right? And that's where self-awareness is going to come very key, right? Because you don't just want to say what went wrong with the market. Oftentimes, if you're being honest with yourself and you have that good self-awareness, you'll recognize, like, I was in this type of mindset, right? And what that's going to do is it's going to put you in a position where before you've even taken a trade, you'll kind of know how your day's going to go and how you should treat the day, right? Because what you're doing is you're labeling all your emotions and all your feelings. And when you do that, they're not as powerful, right? They don't control you the same way, right? It's a therapeutic technique, psychological technique, either way. Labeling them and categorizing them and looking at what they cause you to do is part of a process of understanding yourself, right? So before you even sit down to trade, you are kind of already aware of, like, okay, today I need to be doing X because I'm in X type of mood, and that causes me to make X mistake frequently, right? And already being in that position of recognizing that that is an outcome in this situation that is frequent will make it more unlikely to happen, right? If you could properly label it. People who tend to get in cycles where they make the same mistakes over and over and over are not good at identifying both ahead of time and in the moment what is going on, right? Then you have people who have full-blown gambling addictions, and that's a whole other can of worms where you just need to walk away, right? And get a better grip on it, where they feel like they can't stop themselves. That's not going to be the same as this, right? It's not the same thing. And also label your winners, right? It's not much to do with psychology, but just a good keep in mind that, like, you kind of want to have a playbook of repeatable scenarios so that you know what to look for to increase your win rate. Or if you are trading off a feeling or some price action and you win off that, go back and look at it, write down the situation, and then after you have 100, 200, 1,000 trades in your journal, maybe there's some similarity you can find, and then a new setup that you can then identify and add to your playbook, right? That's how I built a lot of the trades within my playbook, right? Is off the data I collected in my early days of trading, right? And then once you build up a sizable playbook, then later on, you can get a little lazier and you don't have to do it to that extent. But in the early days, I think it is a very it is a necessity for the process of reaching profitability, but also leveling up, right? Because there's always room to improve, right? If you might be a good trader with a $2,000 account, but as soon as your account gets to 100K, some of that will just go out the window, right? Because now your trades are 5x larger, right? Because if you're just trading a certain percentage of your account per trade, it's you're going to have to adjust or have the mental toughness or slowly work your way up to having the risk tolerance to trade those larger sizes, right? These are things that you got to think about like later in your career, and this is often where even good traders will start to then regress because they will hit a ceiling where it's like, if I trade anything more than this, like I can't seem to keep my psychology right? And then that's a whole other battle that they have to go through. And journaling that's when you want to go back to the journaling. That's when you go back to the fundamentals, and that's where you want to slowly, incrementally work your way up, right? And what you also want to do, and this is so key, and I even struggle with this today, right? This is probably one of the things that I struggle with still, is really, but I think it's so key to prevent spiraling, is to redefine what a good day in trading is, right? And it goes it's right in parallel with the idea that you don't want to be thinking about, I need to make money. You want to think about being a good trader, right? What does a good trader do? A good trader follows their plan, right? Respects their risk, and they don't chase, panic, or revenge trade, right? If you do all those things and you don't make money on one single day, it was a good day, right? Because you stuck to your process and you controlled your emotions, right? And it's so key, because profits come and go, but discipline compounds. Win or lose, consistency is what makes you a great trader over time. And consistency isn't just an income. Consistency first starts with you and your ability to follow your plan, to keep that good mental, and to do your risk management. The money comes as an outcome of you having that consistency and discipline first, right? Money is an output of that, right? So let's kind of move on. Respect money, don't worship it. This is really hard for a lot of people, especially this is actually usually the key conversation that I will have with new people when they're kind of discussing with me the idea of that they want to trade, right? I want to trade, and then they take like their first few losses, or they're in a large account and they're trading so dramatically small and still having such dramatic outsized reactions to those small losses, where it's going to, that trade, you might have to consider trading's not for you, right? It's just the reality of it, right? It's not for everyone. Some people do not have the personality type that gifts or curses them with the risk tolerance necessary to be a trader, right? Because some of us are a little crazy in the early days, right? We're fueled by the delusions that we'll make it when so few do, right? So to trade well, you must respect risk, but never let money control you, right? Fear of greed and attachment to P&L ruins traders. The goal is emotional control, not emotional detachment, right? So if someone was telling me, I can't handle these losses, I don't like to lose money, right? They're already in a position where they're going to struggle with thinking in probabilities, right? They're going to struggle with understanding that losing is part of the process and it's unavoidable, right? But even when what a lot of people do to cheat that is they go down these spirals where they start to act like it just does nothing matters. It just doesn't matter. Whatever. They'll start just blowing up accounts left and right. You'll see this with future traders where they'll be in funded account, or they'll be trying to pass their accounts to get to funded accounts, and they'll just blow up account after account after account. And they're like, whatever, it only cost me $50 to get this. It doesn't matter. And that's not emotional control. That is emotional detachment, right? Emotional control is us recognizing our emotions, labeling them, understanding them, so that they do not control how we do, right? A person, you might have heard the saying, a person easily offended is a person easily controlled. Similar to that, right? There's lots of little sayings like that passed down over time because it's very true. And the market will control you. And you will play right into its hands, and you will give all the market makers your money, other traders your money, because you are falling for all their little tricks. They understand it very well. They know how to take your money. And they do it by playing with your emotions, right? It's like a crazy girl you're trying to date. Not a great analogy. So let's talk about how to process emotions in trading. Step back from profit loss and focus on executions, not outcomes. I have, even at times, just completely removed P&L from my screen. And just not even see it. And I know there are some traders who trade for years, are wildly successful, and they never look at their P&L, because as soon as they see something down 20% on like an open position, it starts to affect them, and they know it will affect them. It doesn't mean that they're detaching from it, because they can see what the chart is doing, and so they roughly know what probably their option position is, but having to face it or having to look at the overall P&L is a distraction, right? And it disrupts them from their focus, so they remove it. They know the trade's not working, but they need to wait for their stop loss and follow their plan, so they just take it off, right? You're still feeling the emotions, but you're not allowing them to become distractions. Different from detachment, right? Makes sense? Then you'll also have traders who have that, all-time P&L, and maybe you are like me, and you are sitting there looking at a P&L for a very long time in my early days. Every time I logged in, I would see my overall P&L, that all-time graph, and it would be like negative thousands and thousands of dollars. That right off the bat, like as the intro to your day, to just stare at that every single day, like, is absolutely brutal on your mental, right? So just removing it and just focusing on being a good trader, and not the money, but just being a good trader. What does a good trader do? Even if you haven't really like finalized what a perfect risk management looks like, or what you don't have like a well-defined playbook or edge, just even acting out the process of what you think a good trader is, or watching a podcast or watching YouTube videos like this, you'll have an idea of what that is, and you will notice slight improvement just from the mimicry of it, right? Acknowledge emotions. Second part, don't suppress fear or frustration. Analyze why you feel it. We've talked about that, right? The power of naming it, labeling it, allows you to have more control over it. Detach from individual trades. No single trade defines you. Thinks in probabilities, not absolutes. Really important. No single trade defines you, right? No single day defines you either, right? This is a big thing, right? Having a bad day, a bad week, a bad month does not mean that you are a bad trader. People go through losing streaks. And the age of social media, everyone acts like they're always winning, right? Especially people, admittedly, especially people in my position, right? Where they're making content or they're selling something or coaching or whatever. They are absolutely in a position where they're going to try to market to you how absolutely brilliant they are. Absolute wizards, best of the best, never lose, just printing money, 6 Lambos. What color is your Bugatti? You know, a lot of that's marketing, and a lot of that behind closed doors is a much different story, right? And to be fair, there's a lot of guys like that, that I know that act like that, and in DMs or personal conversations on the phone, they're a lot different, right? They are just playing the marketing game, and it's just the reality of the social media age, right? But people who are not aware of that game, that marketing game, can think that is reality and not just a sales tactic. If your emotions are driving decisions instead of your system, take a break, right? This is easy to say, hard to do. So let's make sure we actually kind of define what leads to you taking a break. All right. You want to stop if you catch yourself chasing moves out of FOMO. I always tell people that I'm coaching or teaching that you should never feel FOMO because there are infinite opportunities in the market, right? You miss one day, it's not a big deal. It truly is not a big deal, right? There's going to be an infinite amount of more opportunities, okay? So you should never feel FOMO, right? Even when, there'll be another GME. It won't be called GME. It'll be called something different. But these things happen, even when you're talking about different geopolitical events, they're very cyclical, right? The events that happen once in a lifetime are literally so few that they're once in a lifetime. Most things that occur, most opportunities that come up in the market are frequent, and they happen on the daily. So, you might not ever see something like a COVID opportunity happen where the government writes everyone stimulus checks and sends the market on a parabolic run after a massive sell-off. But you might see something similar that just has a different catalyst. It might not be a global lockdown. It might have a different name, be a different type of event. You don't really know what it is, but there'll be another opportunity kind of like it. It might just happen in a certain asset class rather than the whole broad market, right? There's always more opportunities. Most things that are once in a lifetime are rare, but they're usually not actually once in a lifetime, right? That's what I meant to say earlier. I think so. Anyways, ignoring your own risk rules, really important, right? People, that's usually what happens with people who are like, oh, it doesn't matter. It's just money, whatever. It doesn't, they go on tilt, right? They start just throwing the money around. They start oversizing. Maybe they're over trading. And also keep in mind that, so far, all I've been talking about is more negative emotions, right? You have to understand that mania is a thing, and you can feel too much positive emotion, right? You can get too overexcited. You can get too overconfident. Maybe the ego starts to swell. Maybe you're like, I'm the freaking greatest that's ever been. Everyone agrees. And I'm going to put half my account in one trade because I'm always right. That's how you also blow up, right? So whether it is driven by good emotions or bad emotions, you want to be always following your risk rules. When you start to ignore them, and for me, I think that's hard to do when you're in a good mood, right? You're in a good mood, you're on cloud 9. It all depends. Some people think it's easier for a good mood or a bad mood to identify, but you're going to need to take note of that. Good moods can cause you to also spiral, make dumb decisions. You don't want to be revenge trading after a loss. We've kind of talked about that a lot. I don't want to beat a dead horse. Feeling numb to risk, right? overconfidence. Those are the good emotions that we're talking about, right? Step away, reset, trade another day. And even more than that, I should probably have added, if you feel any of this, even heading into the day, maybe the previous day was a bad day, and before you even sit down at the desk, or before you even open the app on your phone, or whatever your situation is, you're already feeling like I've got to I'm on fire and I'm gonna have an amazing day. I made so much money yesterday, I'm gonna make so much money today, or maybe you're thinking, I lost so much money yesterday, I've got to make it back today, what am I gonna do? Like, it should be an indication to you that maybe you need to take another day off. Maybe that other day off turns into a week off. Maybe it turns into 2 weeks off, a month off. That is the point in time where the hardest thing for you to do is set the ego aside, set the pride aside, and say, okay, I don't want to hit the button, right? I don't want to hit the button right now. And it's what you got to do if you want the long-term success, right? Signs you have too much in a trade. If you feel anxious or sick watching the screen, checking the position every few seconds. This is something that I don't think that we've ever talked a lot about, which is why I wanted to do like a full-blown video like this. There's a lot of data that shows that people who look at the screens less tend to have better outcomes, right? The less they look at the chart, the more money they end up making, which might sound odd, especially if you're trading something like Forex or futures. But you'll have to also understand that a lot of that comes down to the fact that a lot of those people will hit a few really good trades on the day and they'll be like, okay, I'm riding on cloud 9. I'm going to call it. I'm going to be done for the day. Or people are like, okay, that was a really rough start. Got totally blindsided. I'm just going to walk away from this right now because I'm annoyed, recognizing that. Or people who are opening swing positions and checking them every day. The most egregious version of this that I think is ridiculous is, obviously there's the huge brand new, investor where, they obsess over what their Bitcoin's doing every day. What is Bitcoin doing now? And they've got like $20 in it or something, right? if that's you and you're watching this and you're trying to learn about trading and you're already checking your balance in Bitcoin, not to shame you for having a small account. That's not the point, right? The point is that you aren't staring at it constantly when you have a plan that is a multi-year time horizon, right? Or as a swing trader, you might check that position every few days. You might even automatically set it up with a stop loss or have an alert set to go off if it hits certain targets that then draw your attention to it. And until it hits those targets, or certain news hits it, there's really no real reason to look at it other than you rolling the dice on whether or not it's going to affect you in some emotional way. So if you have a plan, stick to the plan. Don't make adjustments in the middle of the plan, right? Especially if you got a bunch of data to back up your trade plan, right? You don't really want to be making decisions in the middle of that. You want to be making decisions after you've completed the plan, right? After you've collected the data. And what that does is just eliminates the room for human errors, human emotional errors, right? And instead you're taking a more structured, organized approach to your trading. You let the trade play out, you let it hit the stop, you let it hit the target, and then you reflect and review, and then you set up a new plan, right? If all your trades, if you take 20 trades and for all of them you didn't follow your plan, you made an emotional decision, you reacted to a certain candle the wrong way because it made it feel you a certain way, there was a headline and it didn't negate anything, but you got skittish because of the headline. Like, those really aren't ideal situations. And there will be some wiggle room But you'll know when you can have that wiggle room, right? If you're early, you don't have that wiggle room, right? And even then, it's a really risky thing to do, regardless of how long you've been doing it. So try not to be constantly checking the charts. If you can't sleep, eat, or think about anything else, just be careful with this. Think about anything else. Obviously, I'm very passionate. This is literally all I think about. But I don't think about specific trades. Difference, right? I think about trading all the time. I think about markets. I think about businesses and different geopolitical events and different outcomes. And I'm always toiling in my head with something. It doesn't matter what I'm doing. I'm out with family. I can't turn it off. I have had a massive passion about this for years, and I've literally never been burnt out about it. That's not the same as you can't go out and have dinner with your girl and enjoy being in the moment because you're thinking about this position you have on your account. What if it goes bad? That's also a sign that you probably put too much into the trade, and you need to lower your capital that you put into each position, right? Lower that allocation. And when you can let it sit without staring at it every second and thinking about it all the time, then that's probably a good starting point for you for your sizing. I've never been able to not eat. I don't know what that's like, but I heard it's a thing, so I put it in there. Dad bod vibes. All right. Feel desperate for the trade to work. That's a big one too, right? You don't want to be in a state of desperation because it's a very emotional state to be in, right? You want to act from a position of confidence. You don't want to act from pretty much any other mental state, right? Not overconfidence, just confidence. I have a plan. My plan works. I act as if this will work. I follow the plan accordingly. If it doesn't work, it's just a probability. I move on and I think about the next trade. Next trade mindset. Yeah, we covered that. Toughing emotions and sizing up. This is the process of as your account grows to trade larger and larger sizes so that you can get that exponential curve in your account. Now, for a very small percentage of you, there will be points where you have to start worrying about liquidity, but let's assume that by the time you hit that, you won't need to read this. So you want to get comfortable with smaller risks first. We talked about that. Size it up gradually, not all at once. We've talked about that, right? Even if you hit a grand slam, let's say you hit a wild 10,000% trade, something crazy happens, and you went max risk on it, but still stayed within what your normal risk is, and so your account grew by 20% in a single day. Does that mean you automatically take a large scaling on the very next position you trade? No, I would probably, for a few days after that, trade the way you always had, or do small gradual increases, even as small as just adding one extra contract to your position size until you get a little bit more comfortable, right? Because you don't want to, you want to avoid, because first of all, there's no rush to it, right? You don't want to be forcing things. You don't want to be rushing to it, right? If you're scaling up once a day, in 40 days, you're going to have scaled up substantially, right? So just let it compound over time. Keep the discipline. Slowly work your way up to it, okay? And sticking to a process is important. Not an emotional reaction. Reframe losses as data, not failure. We've talked about that. That comes with the mentality of being a good trader, not in it for making money. Size up only when your process is consistent, not when you feel ready. It's also really important, right? Let the data lead the decision making, not your feelings. Metacognition. This is really important. And this is kind of one of those things where some people are just inherently better at this. Could be just, you were just born this way. Some people are not. Some people are not very self-aware. And so they really struggle with this. Some people are their egos. Some people think they are their thoughts. If you don't know what I'm talking about, if you've ever argued with someone and they said an idea that you know is wrong, right? They say, oh, the sky is purple. And you say, well, I mean, the sky is blue. Like, I can see it. It's blue. It's not purple. And then they start attacking, like, who you are and your character, and they become overly defensive, right? That is someone who's not that does not come to the realization that they aren't their thoughts, right? They haven't come to, I don't want to call it enlightenment because that sounds really pretentious, but they really haven't reached emotional development to understand that, oh, I'm a human. Sometimes I think dumb things, but I am not the things I think, right? My brain just sometimes outputs dumb things. That doesn't make me dumb. That's not a reflection of who I am, or maybe you watch an old video of yourself and you did something really embarrassing, right? The fact you feel embarrassment about that is a sign of growth as you as a person. It's actually a good thing that you feel that way. You shouldn't cringe when you feel that emotion. You should embrace that emotion, because that emotion that you feel watching that embarrassing thing that you did shows that you are growing as a person, right? Embracing that is the right way to handle it, right? It's all kind of plays into what metacognition is, right? It's becoming a higher level thinker. Thinking about the way you're thinking and stepping outside of yourself, right? So if you something happens in the market and your thought process immediately goes to, I gotta make this money back. Think about that in the way of, like, maybe even in a third person. Sounds a little crazy. It's not. I promise. You'll be okay. You won't develop schizophrenia, or will you? But you want to think, like, if I have a trade play out and I'm like, jeez, I got to make that money back. Everyone's going to be judging me. I'm having a rough time in the market right now. And I make all these videos and stuff, and I'm supposed to be the best at this, and oh no. And then I want a revenge trade, and I want to prove I'm good. And I need to stop and think to myself, Josh is feeling really self-conscious right now. His pride is flaring up. His ego's flaring up. And why is he feeling this way? Okay, let's label those emotions so that we can get control of those emotions, then compartmentalize them. And then this thing happens, I feel this way. And what you're doing is you're creating data from these so that you control them and they don't control you, right? Stop thinking thoughts. Think about why you think those thoughts, right? When you can observe your emotions like an outsider, you control them. When you control them, you trade with clarity, right? You want to detach from the ego. Many traders tie their identity to their trades, leading to self-sabotage. If a trade fails, they feel like a failure. If a trade wins, they feel invincible. I will say, if you've traded live with me, I do this all the time, but I do it ironically. I think some people, when they're new to the community, they don't understand that I'm a little bit of a goof, and I think irony is hilarious. I think I'm the funniest when I'm being ironic. So oftentimes I will act this out, but you have to understand that you don't want to be in a spot of ego, right? Because just like we talked about, these positive emotions can still derail your progress. They could derail your system. They could blow up your account very fast, okay? Trade is just data, not a reflection of your worth. We kind of talked about that. Really important. Learn to analyze your own decision making like you would analyze a stock chart objectively. We've talked about that. Learn to be flexible, not rigid, right? Practice the pause. This is so important. Okay, this is so good. When you're working on this, and maybe you've hit the point, or if you're listening to this right now and you're like, wow, I'm not good at any of this. Okay, here's step one of getting good at it. Practicing the pause. Okay? So even when you're not trading, when you have an emotional reaction to anything, just practice a pause. Oh, I'm excited. And just think about it for a moment. Just sit in that excitement. You get angry. Just sit in the anger for a second. Just be quiet. Don't say anything. Just think about it. Okay? You get frustrated. Sit Think about it. Pause on it, right? For that moment, nothing else matters than you processing the emotion that you feel, why you felt it, right? What am I feeling? Why am I feeling this? All of that, right? Learning to become one with this process, practicing the pause, is going to be so key. Pretty much everything else in this will kind of fall into place, right? And you just practice the pause over and over and over, and then you're going to become a guru. You're going to ascend to the top of the mountaintop and control the clouds with your mind. No, but it's going to be huge for improving, right? Last thing, well, think, what would I tell another trader in my shoes, right? This is often, lots of people are like this, right? Lots of people give great advice and they never take their own advice, right? Lots of therapists and stuff. I've read a lot of philosophy books, and there's a whole subculture of self-improvement. Everyone's got the self-improvement books, and one of the most common tropes is treat yourself as if you are someone you are helping, right? Because we tend to know what we should be doing, and there's just a lot of junk that gets in the way of us actually doing that, right? But if we were helping someone else, suddenly we clear all the junk out of the way. All the baggage that we carry mentally in our heads just kind of is removed because we're thinking about someone else. Make sure treat yourself as if someone you actually care about, though. Obviously. The moment of reflection before reaction is where discipline is built. It's so huge. Turn emotion to edge. This is super key. Okay? Lots of people struggle with developing edge, right? The strategy. They treat trading like weight loss, and they're like, what's the magic pill I can just take that's going to help me lose weight? I guess that analogy no longer works, because technically there is a magic pill you can take, but but you want to but you could turn your emotions into edge, especially if you're an emotional trader, right? So if you feel FOMO, it probably means the move is already started and it's better to wait, right? And sometimes you doing this is going to lead you to missing trades, but that's better than losing money because of FOMO, isn't it? Right? And if you feel fear, ask, am I actually wrong or just scared of short-term noise? Right? So you don't make an impulsive decision, right? This one's a big one for just also making sure you're not looking at the charts too much, right? Markets love the back tests, breakouts, or patterns, and those moments really test people's convictions, right? And their plans and the process and their confidence, right? And so if you're someone who's constantly overreacting to that retracement or that noise, then maybe you need not look at the chart as much. Maybe do a little bit more automation or set more alerts, so that you don't stare at those when they happen, right? Let the trade play out. I just lost my place. If you feel overconfident, check if you're taking bigger risks than normal, right? It's the thing about, positive emotions can also get out of hand. Great traders don't ignore emotions. They listen to them, but don't obey them blindly, right? Don't let them control you. You control them. Journaling. We talked about journaling. Yep. What you're feeling before and after, did you stick to your process? What can you do better over time? Over time, this turns into self-awareness on autopilot, right? If you're struggling with anything that we've talked about, I don't know why there's a blank page here. I need to remove that. If you're struggling with a lot of this over time and it becomes a long-term journey for you, understand you're not alone. And although people may not be open with how hard it is, for them to get their psychology correct, for them to stay in a good mental, be forgiving with yourself. You might just be in a rough patch of life. There might be a lot of things, external factors that make it hard for you to focus on the chart. You go through periods of struggle. You go on dry spells. Your faith in yourself will get tested. But that is the nature of the game. You know, it's the ultimate performance sport. And over time, these things will become autopilot. Over time, just know that these things get easier, especially with experience in the game, right? And don't become jealous or don't think that there's something wrong with you if there are other people who picks this stuff up easier. You know, some people don't need to go over psychology 101. I've met people like that. They're the worst. They just get it and they just have the right mentality. That's okay. Everyone's different. You have your own advantages and your own process. It's part of your own story, and that's okay. So I hope you learned something from this. I hope it is beneficial to you. This is, you know, if you're watching this video, maybe you came over from an Instagram video and you clicked on the link to this video in this document, or maybe you found it in the Discord. Understand there's a lot more educational content in the Discord, you know, more things, identifying edge, how to use your personality to identify what type of trading style might be best for you. Lots of things you can find there. Free to join and look at any of our education. I have a philosophy, all education should be free. So feel free to check it out there. Join the community if you want to learn more. Oh, and God bless.